Just saw a news report saying renting a home is more financially prudent than buying one. Let me talk to you about why that's not true. Did an analysis using a subscription here at MBS Highway that tells me information about the markets, namely interest rates that are improving today. And we looked at renting a house, which right now in Los Angeles County, especially in the LA City area, rents are going for about $26.50 for a 2-bedroom, 1 bath. If you include renter's insurance in that scenario, it's another $30, and we're including annual rent increases, which is about 3%. On average, it's actually closer to 3.5% nationwide. Okay, so we're looking at a scenario where renting is about $26.80 and buying is about $800 higher than that per month. Okay, and what we're looking at is when rents, which is this purple, become as high as the blue, which is buying. Okay, and as you can see, it gets pretty close to that about year 9. So I think it's fair to say year 10, you'd be about equal to what you're paying in rent. Now, most people are looking at, well, I have to put money into the property, right, to purchase it. So yeah, you'll lose, it looks like, the cash flow here of about $41,000. But I think what people forget is appreciation. So we've had some pretty high appreciation here in California. We've had 20%. I believe in 2021, we're on pace to basically be close to 10% this year in 2023. Appreciation, and this is using a 5% appreciation model, is basically going to take this condo from a starting price of $450 to an estimate of about $700,000 in about 9 years. Now, there's a few things, okay? So whenever I present on this type of information, the best thing to do is go with what you know, right? Do you know anybody who bought a house a few years ago that's worth probably double now? Okay, yes, you do. So the reality is this could happen in 9 years. So let's talk about some other numbers. We have $450 as a price, about 1.25 standard Los Angeles County tax rate. Homeowners insurance, $131, probably could be a lot less than that for a condo. I'm even including annual property tax increases of about 2% per year and an HOA of $400 a month. Along with, if you were to sell this house, about a 5% cost to sell, which is about $35,712. Okay, now when you own a property, you're paying into your equity as you pay down your mortgage. That's estimated to be about $49,000 over the course of 9 years. Okay, and the gain is also estimated to be about $264,000 over 9 years. Even with the cost of sale being about $35,000, you also get a tax benefit, don't forget, of having a home, which is estimated to be about $28,000. So the net gain of buying a house is $250,000. Now, why would gaining that, owning your own property, not be better than renting? This is absolutely better than renting. So those of you who are sitting on a fence, and this is a little further analysis here, initial closing costs, the cash flow difference, the cost to sell, right? But you have your appreciation gain, you have amortization by paying down your mortgage, you have a tax benefit as well. Okay, so that's what's giving you the net benefit of buying a house. So buying a house is absolutely better than renting. It helps you build wealth. Okay, anybody who tells you to rent already owns. Okay, and the reality is, in order for you to build wealth, and most of this is for Black, brown families, this is the way to help you become rich or build generational wealth for your kids. Carlden Lainfiesta, the Mortgage Fiesta, casual Friday, but I wanted to make sure I give you guys some good tips. Talk to you soon.